please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Last 10-12 days now, the SGX Nifty and the markets have opened in a completely different direction. So, may not be giving you a good indication, but since we do track it, for now it's showing 10,687 on the Nifty futures. Ashwani Gujral, Prakash Gaba and Rajat Bose now join us. Good morning, gentlemen. Ashwani, what's the trade this morning? On Friday, we almost closed at the low point, the lowest point of the series. Does that change things, or has that presented a buying opportunity?
Well, good morning. Banks closed at the highs, Nifty closed at the lows. I think we are still range bound. I don't think global cues really matter because Asia is not showing great follow through. I think the big follow through may come A, tomorrow because of ICICI, and B, on the 15th of May because of the results. In between, I think it'll be choppy trading, particularly today, and maybe you'll be better off trying to play individual stocks. While I have given buy calls on the indices, now they start to work out only once we get beyond Friday's highs. So otherwise, it should be a fairly range bound and choppy day.
Okay. Well, fundamentally, actually, Ashwani, there is a booster coming for bond prices, which normally helps PSU banks and NBFCs. How are they positioned chartically?
See, the problem is Bank Nifty did not go down because of the yields. I mean, had it collapsed 1,000 points, you would open up 200 points. But if we are at almost recent highs, then it's not really priced in. The high bond yield is not priced in. In fact, people are expecting it to come off. But you may get an initial rally, but nothing significant.
Right. Actually, the private sector banks are not really aligned to bond prices at all because they have just the right amount of bonds. So they don't really benefit if bond prices rise and bond yields fall. But the NBFCs do. So that's why I was asking you, PSU banks and NBFCs are the more likely beneficiaries. You don't see anything in their charts?
See, again, I mean, they didn't collapse because of high bond yields. So the positioning isn't there for a big rally.
Sure.
Okay, Prakash Gaba and Rajat Bose are also with us. So let's quickly get some comments from them. Gentlemen, morning to both of you. Prakash, it was the first weekly loss that we saw in over 6 weeks. Is this the start of a downtrend, or do you think that we'll just chop around this band of 10,600?
You're right, Sonia.
10,600.
You're right, Sonia. We have seen some kind of first downfall, but after 26 trading sessions from swing low to swing high. So after such a big move, we normally tend to get some correction. So what we are seeing is some kind of a correction. We can call it choppy. We can see some more slide, but that looks like a good, clear trading range out here. We can see on the downside levels closer to 10,540. If it goes down further, maybe 10,450. It needs to be staying in this chopping sessions. And until the high that we have taken up, 10,800 zones taken out, we would be in the choppy zone, because it looks like the results, until the Karnataka results are out, we would be in dropping there. But like Bank Nifty is showing some kind of support out there, 25,400. As long as that holds, I think we would be in choppy range.
Okay. Ashwani, just one more follow-up on the IT index. Till about 3 weeks back, of course, it was the leader. The correction there, you reckon, is giving a nice entry, or you think it can correct more?
See, the issue here is that several stocks have gone up vertically, and once that happens, IT results are a bit choppy. You can't say across the board something has changed. So my sense is that maybe some more consolidation around this 13,000, 13,200 range, you'll see a resumption of the rally. So this is going to lead the market, but for the moment, chances are the banks could take the lead for the next 3 or 4 sessions, while IT takes a back seat.
Okay. Well, with that, Rajat, how are you trading the indices?
Well, I would say that as long as the Nifty doesn't take out 10,600 level, rather 10,600 to about 10,650 decisively, I'm talking about the spot index, it would continue to show weakness, and once this initial positive news, effect of the positive news wears out, it might again settle down for lower levels, and once 10,600 is taken out on the downside, 10,490 to about 10,475 could be quite likely. And my senses are telling me, or the chart reading that I do with the cycle studies, that up to 15 there could be some uncertainties, and because of that Nifty might actually settle for lower levels. Call it a correction or whatever you will, but this is it. Regarding the bank Nifty, this is actually helping the Nifty sustain itself at these levels. It is still range bound between 25,425 and 25,725. If Bank Nifty takes out 25,737 decisively, then you will see good rally happening in banks. And finally, the Nifty IT index needs to cross 13,665. Despite showing a hammer line in the last session, we need to see follow-through buying today. Unless that happens, the selling might resume once again here in Nifty IT.
Okay, well, let's also do one thing. Let's start talking about individual stocks now. Ashwani, IT, of course, has been the space to be over the last many days. From that space, anything that you can trade today, and what else would you be looking at?
See, I think Tech Mahindra came back very strongly, so that's a buy with a stop of 656, target of 680. The issue with IT is that stocks may now become sideways for a while. They may not make fresh highs. So basically a pause in IT. But what's interesting is ICICI Pru. After that, big, strong move, it's consolidated for several days. I think once we start getting past this 445, 450, there could be continuation here. So ICICI Pru is a buy with a stop of 428, target of 450. Jubilant Food is a buy with a stop of 2500, target of 2650. Adani Port is a buy with a stop of 400, target of 425. And Havels is a buy with a stop of 535, target of 560.
Okay, thanks for that, Ashwini. Prakash, your stock?
Apollo Hospital looks like a buy, is typically sideways zone, perhaps can climb up to around 1130 zone, stop below 1090. GAIL, Gas Authority of India, looks like it's stretched on the downside. Up move could start here. Target of the upside is 337.40 zones, stop below 325. I have two shorting ideas. One is Bank of Baroda, looks more of an exhaustion here. Can see a slide to around 135. A deep stop above 145 is required. And JSW Energy looks a bit weak, is broken down. Possible target on the downside is in the vicinity of 72 or even lower. Stop above 78.
Okay, Rajat, what about your stocks?
Well, I have two buy calls and two sell calls. Havels is a buy. Havels has shown a piercing line after giving a good correction, and this piercing line is a bullish formation. So put a stop loss below 534, 546 and 553 are the two targets for Havels. And VBL, that is Varun Beverages, this is a regular pattern, a saucer pattern is bullish, saucer pattern is there. 712.90 is the stop loss on closing price basis, and target would be 738 and 750. You can take it as a positional target that at least extends up to tomorrow. And two sell calls are one on Tata LXI, sell it on a minor intraday rally up to say 1172. And put a stop loss above 1191 and target 1125 and 1090. And Delta Corp is a sell. It's in a downtrend. At least at level of 239 is likely to be tested. I have kept targets of 242 and 240. Put a stop loss above 247.25. So two buys and two sales for the day, and all are mid caps.
Okay, thanks a lot for that. Well, the stock that was in focus on Friday was Hexaware. It lost 15% on very large volumes post their earnings. The results were good actually, but it was the revenue guidance which disappointed. There was no upgrade despite a very strong first quarter. R. Sri Krishna, the CEO of Hexaware Technologies, joins us on the phone line to talk about that. Sri Krishna, good morning and thank you for speaking to us. As I mentioned, it was not the results that worried the street. It was the fact that despite having a good Q1, you didn't scale up your revenue guidance. Are you being conservative?
Well, I said a few times on Friday that I like to see 2 quarters of data before making a change to the guidance. That is what we did last year also. We started off with the guidance, stuck to 2 quarters before changing it.
Okay, well, I take your point and thank you for staying up for us, Sri Krishna. You know, the point is your constant currency YOY growth also has been receding for the past several quarters. That is also a bit of a worry. Margins are a bit of a worry. On top of that, when you yourself sound a little wobbly about the next 2 quarters, it kind of unnerved the market. Anything further you want to tell your investors?
No, actually, so our growth was better than expected in Q1, right? I had guided at the beginning of the year that our Q2 and 3 will be the strongest. Our Q1 will not see a lot of growth, but actually we did quite a bit better than that, and our bookings were better than year on year. Our bookings grew from a quarter ago last year. So there's a lot of reason to be optimistic about the future. Just as a policy, I don't like to change and upgrade. I don't like to change a guidance every quarter.
Okay.
I absolutely do like to wait to see.
Okay, going by what you're saying, there are reasons to be optimistic. Can we at least say there is an upward bias to your guidance?
Well, let me say this, right? That the CQGR ask for us to meet our revenue goal at this time is a relatively low bar that we feel very good about. And I'm talking about the upper end of the guidance. The CQGR asked to meet that is a pretty low bar.
Yeah, 2 to 3.2%, yes.
Correct. And so and we feel very good about meeting it.
Okay. Can you tell us a little bit about what the plans are with respect to the cash? You have more than 600 crores of cash on the books. What can we look forward to?
So we are evaluating acquisitions almost on a daily, weekly basis. We are taking a look at a number of potential targets. It is our desire to do an acquisition in this year, but it is not. We are not under any pressure to meet growth targets. Whatever growth we're talking about is organic, but we would like acquisitions to be an additional growth driver, and we are quite aggressive in evaluating multiple opportunities.
Just a final word on BFSI. Some of your larger peers. Well, now let's put some fundamental cues on the table. Harendra Kumar, Managing Director, Elara Securities, has joined us. Good morning, Harendra. Always a pleasure to have you with us. Well, I can't not begin this conversation by not asking you about ICICI. I mean, should one expect that it will go the Axis way after the results? Zoop.
So Axis has different triggers, Lata. I think, the moot point about ICICI Bank that people have to understand that all the triggers have played out. So over the last 2 years, we all waited for the unlocking of the subsidiary valuation. The stock was at 300 rupees and people had bets of 400, 420. So now all of them are listed. So now the market is saying that the implied price of ICICI is potentially 150 rupees now and it is cheap. But at the same time, the ownership of the stocks have doubled actually, and without any impending triggers. So my worry is not about what the numbers it posts today. It's about how much of value derating or negative alpha that's created, and potentially if fund starts to sell off, the stock could correct. So I think we're sitting at a point where people are looking to interpret what it can deliver over the next 2 years, given that all the triggers have played out.
Okay. Harendra, hi, good morning. I wanted to ask you about Hexaware because the stock had fallen quite a bit on Friday, but the management was very optimistic. We just spoke to them a while back. Is this a stock that you would attempt to buy at this price?
See, all mid-cap IT stocks fundamentally are looking, investors are looking at them. But I think the big trade is currently over the next 3 months is in the large-cap IT space. We did speak about how TCS will lead the rally in the last time that we spoke. I think there is still huge phenomenal upsides on the large cap tech side and selectively on the mid caps as well. So tech as a pack is still a relative outperformer in the overall space. So specifically to Hexaware, I think I think over the next 1 quarter, if it gets corrected, there will be continuing buying again at this point of time.
Okay. Well, Harendra, speaking about finance stocks again. Where are you placed on NBFCs, especially, say, housing finance companies? We saw some mind-blowing numbers from some of them like DHFL and Indiabulls Housing. DHFL, I think it was an 80% growth in loans. Housing finance in particular, NBFCs in general.
So NBFCs, obviously, Lata, there are so many categories out there operating. Specifically on housing finance, I think there is a structural growth in terms of the asset growth. There is no problem out there. I think what the market is adjusting is to the compression in spreads, given where the 10-year has gone. I think when it's readjusts to a newer valuation, I think the run in housing finance companies will continue. There's a lot of traction in auto financing as well. I think be it Chola or some other stocks. So prima facie, beyond the readjustment on the NIM side, things are still okay out there.
Okay. Well, the other set of numbers I wanted to talk to you about, Harendra, was Avenue Supermarts. Looked like a very good set of numbers. No fault there. But once again, I mean, the stock has run up almost 40% over the last 6 months. You think it's priced in a lot of the good news?
Sorry, we don't cover Avenue Supermarts.
Okay. All right. What about the other FMCGs? I mean, we saw it was a very confusing pack. Dabur was good, Marico was disappointing, Emami middling. What are your thoughts?
So Lata, I think structurally consumptions is one of the outlier sectors in the new rally. One is, of course, this huge stimulus that's flowing into rural areas, and it will actually manifest in volume growth, number one. Then you have margin expansion in terms of the GST. Remember, all this can be capitalized and monetized only by the very large companies who straddle across the basket. So HUL is right up there. Specific to Emami, I think it's more about the company and its product basket that's struggling. We've just downgraded the stock, today, in terms of its price performance. Marico has its own Copra issue. So these are company level fundamental issues that are impacting. But overall, as a space, there is humongous triggers out there. So I think the PE re-rating from here will continue. But the idea is to stick to a HUL, a Nestle, among the larger side who are seeing transformational work percolating into the numbers.
Okay, not even Dabur.
Dabur is, a small, it had a reversal trade, given that the last 2 quarters numbers have bounced back. But it needs to be seen whether its portfolio gets sustained and, combats Patanjali at a much higher level. So, given this risk, we would want to wait for it to play out. And the safer bets would be to be with an HUL and an Nestle at the given point of time.
Okay, Harendra, let me get away from all this. Generally, what are you advising your investors? There is a Karnataka election, but I mean, we've seen elections come and go. There is micro growth, no denying that, but there are macro headwinds. So exactly what are you telling investors? To buy every dip, or to be extremely stock specific, or just go out and buy because the largest story of earnings is on?
Lata, there is a shift in the way the market is behaving. We moved out from a deflationary cycle to an inflationary cycle. So the oil marketing companies, the NBFCs were all animals of the deflationary cycle, and they had a fantastic run. Today you see OMC selling off, NBFCs slightly under pressure, right? I think you need to be positioned to the inflationary stocks. So that's how we come to a top-down approach for FMCG. FMCG does phenomenally well when its pricing power comes back, and it leads to a tremendous PE rating. Secondly, even metals for that matter. So I think your FMCG, metals, a depreciating currency in tech is typically the theme. And this is enough to lift the market to new highs. I think we spoke about last time at 9,800 as the bottom, and the market moving to 11,400. I think we're on course for the next 3-4 months. We'll reassess at that point of time in terms of what is leading. But I think currently the trend is on and the sectoral shift is underway. So you need to be positioned correctly in the right stocks.
So when you say inflation, stocks which benefit from inflation, you said, yes, FMCG. Which else? Would it be cement? I mean, what would be your other leading sectors?
I think metals had seen a lot of volatility, but it doesn't take away the fundamental numbers that prices are on an upward trajectory, volume growth in steel you're seeing, aluminum is held up very, very strongly. Beyond pyrotechnics of what's happening between Trump, the trade wars and others, the space, the fundamentals of the space are extremely strong, and especially with respect to India. So I think metals, FMCG, these are two. Then you have, of course, aviation, which is also largely consumption driven. It's corrected big time now, given the concerns on yields. So the tick marks on these side are very different set of stocks than what we potentially traded over the last 2 years.
In fact, some of the hits, if you'd want to call it, this earnings season include the likes of, Kotak Mahindra Bank, there was L&T Finance, there was Edelweiss, DHFL was not bad. Anything from the financial space that you like from the ones I mentioned?
So I think you're missing IndusInd Bank. I think it's been a great compounding story, and we like what the management is speaking in terms of its strategy. Its current inorganic strategy in terms of going towards the microfinance is very, very apt. I think if you want to look at a 3-year compounding story at 20% plus earning CAGR and with a phenomenal P rating, I think IndusInd is the stock to be in. Kotak, it's still to get out of its M&A piece that it's getting into it. And if potentially gets into another M&A piece, we don't know how long it's going to, try to be correcting its structure. So as of now, the safer bet for us is potentially IndusInd in the private bank space.
All right. Harira, that's a bunch of stocks you have given advice on for us. Thank you very much for joining us and have a great trading day and trading week yourself. Okay, that's the word coming from an expert on several results that have just been announced. Now let's get back to the day and to some FNOQs. Vinod Sharma of HDFC Securities with us. Good morning, Vinod. Is it a long trade on the Nifty?
Yeah, good morning, Lata. We have already had a very open view that I think although developing stories, Karnataka is a developing story, and Mr. Modi is a great finisher like Dhoni. So he'll wrap up the innings quite fast. So our view is that the market is worried on account of the elections, and therefore we had an early view that you need to buy it in, you need to buy, and the market likes to climb wall of worries, and that's exactly what we're looking at, still advising to buy the dips and also to remain invested. And we have certain companies which will do better than the markets.
Okay. Vinod, good morning. So let's discuss those companies. What would be your top stock calls?
Yeah, right after the election day, we have held out the insurance companies are going to be a safer bet even if the markets were to go down. And insurance companies this is a sector which is very safe. FIs can't sell and they are selling the parent companies. To that extent, I am buying the ICICI Pru at a 440 call at around 14, stop loss at 10, target of around 22. And the results, which were 93% increase in new business, augurs really well for the stock. So I think it is going to go still higher from here.
What else are you looking at?
We are looking at IndusInd Bank. I think that was suggested by another guest. I am buying the 1900 call here at around 30, stop loss at 20, target around 50. This is a stock which has consistently done well, and the fact that the commercial vehicles to which it caters to a certain extent in its lending, I think is doing extremely well, and it is a structural story for the next 2 years.
And there's L&T Finance as well.
Yeah, L&T Finance is technically well placed also. I think I am buying the 180 call here at around 5 rupees, stop loss at 3.5 and target around 8 in this series.
It appears to be also fundamentally well placed,
yes,
according to a lot of analysts. Okay, and then you have two non-financial stocks. You have Tata Global and Tech Mahindra.
Yeah, Tata Global is a consumption story. And although we have seen the open interest has not been added and people have in fact reduced the positions, but the stock has come down by around 1% in the current series. But I think that this is a stock which needs to be bought. And currently, yesterday it had gone up on Friday it had gone up by 0.5% despite the reduction in the open interest. So I'm buying the 290 call here at around 11, stop loss at 8 and a target around 16.
Okay, Vinod, you have a good day. Thank you so much for joining us and talking about it. Okay, I think you have one more call.
Yeah, Tech Mahindra is left.
Okay.
That is another story in which the stock is doing extremely well. Series, it has open interest has gone up, but the stock has fallen. But yesterday, the open interest went up and the stock went up by 1%. I think it's time to pick up this stock after some kind of a correction. And I'm buying the 670 call here at around 23, stop loss at 8 and target around 32.
All right.